There's a lot to Dodd-Frank, obviously. I mean, I think that, again, in terms of the impacts of Dodd-Frank, I mean, that's still being, studied and assessed. I mean, some volatility is obviously, part of the markets. But it's something we monitor very, very closely. But, I don't think there is an indication that Dodd-Frank is causing some of the issues that people have targeted. But it certainly bears, watching, and we are, going forward.
Specifically in the credit markets, more and more investors, individual investors, have now gone into start trading loans. The loan market has not been regulated yet. When are we going to see the SEC step in there?
Well, the fixed income markets, I mean, are something that are very high priority, very important, markets. I actually spoke about this in New York a couple of months ago and really made that point, and also made the points about a number of things that need to happen there. To some extent, the fixed income markets have not been the beneficiary of all the technological benefits that the equity market have enjoyed. Investors haven't enjoyed those benefits. They need to enjoy those benefits. And so some of the things have already happened in the last couple of months that I think make things better in those markets. Best execution rule has been forwarded now to the SEC staff from the MSRB, for example. Both FINRA and the MSRB will soon do a regulatory notice in terms of greater disclosure for what used to be called riskless principal transaction, but same-day transactions. And then real focus on pre-trade transparency is very important. That also, deals with the liquidity issue to some degree.
Well, the equity markets have also had the upside or possibly the downside of high-frequency trading. Michael Lewis and his book put it in everyone's mind and everyone's attention. What do you think about HFT?
Well, I mean, again, there's no one thing that's HFT. I mean, clearly the markets have, benefited tremendously from technological changes, particularly the equity markets. HFT describes a lot of different strategies. Clearly at the SEC, we've always been focused on, I've said publicly, we have investigations of wrongdoing by high-frequency traders and other kinds of market participants. We just brought a case, in fact, in that space, a couple of weeks ago. But I think it's very important to be clear about what we're talking about. If there needs to be a change in the rules, that's separate from enforcing misconduct or market manipulation, which the SEC has always done, continues to do very strongly. We are studying that really soup to nuts, and we'll make changes. I mean, we do have the strongest, most resilient markets in the world. These technological advances have benefited investors in terms of transaction costs, liquidity, but that doesn't mean they're perfect. And we want to optimize the level playing field, fairness, depth, quality in every way for investors and the companies raising capital, and that's what we're in the process of looking at.
Last week, a study was done. It was reported that an outside company is providing some high-frequency traders with SEC filings before anyone else gets them. Do you have a comment on that?
No, I think what you're alluding to is our EDGAR system, and there was an academic study that indicated that in some cases, kind of went both ways, that the information on EDGAR may not hit our SEC.gov before it hits the PDF system, which is PDS system, which is really, and it's been in place for a number of years in order to get maximum information actually out to the public. Doesn't cost the SEC anything. We don't get money from it, but there are subscribers who get it. We're in the process right now of looking at the study's findings very, very carefully, doing an entire assessment of our entire dissemination system. We will make any adjustments that need to be made. And obviously the goal is to make that information available to the public 100% of the time. So we're looking at the issues raised. We have data that, the studies don't have at their disposal. We're looking at it really soup to nuts.
We spend so much time comparing today to 2008, how the markets are operating, are there bad actors? Should we have as much confidence today in rating agencies? Rating agencies failed investors in 2008. Do you believe the rating agencies are better structured, behaving better than they were back in 06, 07?
I mean, we're doing an awful lot of work in that space, both in terms of we have a credit ratings office now since Dodd-Frank. We do annual inspections of the major ones. In August, we did literally a dozen Dodd-Frank rulemakings to improve the governance and transparency of credit rating agencies. And so it's something that I think, all those measures certainly strengthen, I think, the credit rating agencies, but it's something, again, to constantly have a focus on.
Do you believe Wall Street is getting the message it doesn't pay to circumvent regulation?
I think we're certainly sending very very strong messages to that.
Are they listening?
Well, I think that is something that I think you have to, I think they're listening to a degree, certainly. I think our enforcement programs are designed to make sure that happens. But I think it is also something that is a constant evolving set of issues that the regulators have to pay very close attention to. The prosecutors do, the enforcers of the SEC do, and we certainly are doing that.
Last week, it seemed that voters voted against overregulation. What does last week's election mean for your agency?
Well, I wouldn't purport to say what all it meant in terms of the election and what all the causes for individual votes were. But I think the SEC is an independent agency. And it's very strong because of that, I think. That's its tradition. That's what it is currently. We welcome congressional oversight of our very important responsibilities. And so the SEC will continue to operate, I think, the professional, independent way that it did before the election and after the election.
As a prosecutor, you are known for being extraordinarily tough. We haven't seen that much enforcement action since you've held this role at the SEC. Are we going to see you go for some big fish?
I guess I would take issue with the premise on that. We had, again, we don't have the criminal enforcement powers, obviously. The Department of Justice has those. But I think we had a record year last year. I made a bunch of changes when I came to strengthen the enforcement program, both in terms of forming task forces, financial reporting task force, microcap task force, requiring admissions in certain cases. Last year we had 755 cases brought, over $4 billion in disgorgement and penalties ordered returned. That's a record year for the SEC. And the quality of cases, I think, was just enormous, frankly, and cutting edge. We brought our first anti-retaliation case against a firm, against a whistleblower. We did market access rule cases. So I think we're doing an awful lot in that space. Always want to do more. Financial crisis cases record of the SEC, enormously strong. Over 170 entities and individuals charged, and 70 of those were CEOs, CFOs, or other senior executives. So that's individual responsibility that's being called to account by the SEC and enforcement.
Should more action be taken against CEOs? As you said, criminal isn't in your jurisdiction, but lack of supervision when there is truly bad play under these CEOs, should we be calling them to task?
Well, I think wherever the evidence would justify that, absolutely. And I think what I always train my staff attorneys and did train my assistant United States attorneys is you take that evidence as high up as it will go, because that's where you should be going for a strong enforcement program. You certainly want to be bringing whatever cases the evidence justifies against the higher-ups, no doubt about it.
What's the biggest risk we face in 2015 in terms of regulation or lack of?
I think it's hard to name one. I think, we're focused on a number, and we're completing rulemakings in a number of, what I would call risk areas. We've done a lot already. I think we want to focus on the resiliency of our market structures, the systems issues. But I think it's a mistake to kind of say, these are the two for 2015. What you really want to do is be watching it as it moves and evolves. One of the benefits of FSOC is you bring together the financial regulators from across the spaces to try to identify emerging risks before they actually come to roost. And so we're all very focused on that.
Do you have enough of a budget to execute what you need to do?
Never. We're over 4,100 people. Our budget's about $1.35 billion. I mentioned we got orders for over $4 billion just out of our enforcement program. There are things we can't do as well as we should for investors in the markets because of that, and I will, continue to, argue for additional funding.